All right, folks, very early recap today. Markets are still moving, incredible moves. Tesla, SFIX, Roku, so many things going on today. I hope everyone's having a good day. I had a pretty miserable day, not in terms of P&L, just in terms of trading. Often Andrew will say, our goal is to trade well, not to be profitable, right? And a lot of beginners scratch their head about that. Sometimes he'll post a recap. He's like, I traded so poorly today. You see his P&L. And people are like, get over yourself. I'm pretty sure there was some comment about Andrew seeking sympathy or empathy. This is a long time ago. I don't forget these things, guys. So watch what you say. Just joking. I made money today, but I broke some rules, broke quite a bit of rules, and disappointed in myself. So I just packed it up after the second trade. We'll get into the trade later on, but I packed it up. I said, I don't care if the market moves a million points. I'm going to punish myself. Because if you guys remember the trading plan I put together, you got to have punishment for these things, right? And what better punishment than to miss moves or quote unquote free money. All right, so we've had some questions in the comments lately. I'm going to try to do that, address these. So Adam asked me a few things here. He talked about for me to do a refresher video on R risk multiples. Also asked about increasing share size. So we'll talk about R multiples because a lot of people seem to be asking that question. As you can see here, got that question a few times. I may be speaking a foreign language if you aren't familiar with what R means. But basically R is risk units, right? So let me just pull over the whiteboard or the blackboard here. An R is a risk unit or a risk multiple. And in finance or day trading, whatever you want to call this, it's a standardized unit, a normalized unit that you're going to risk on every trade. So whether that's a fixed dollar, that's cool, or it could be a percentage of your account. And obviously a fixed dollar is a percentage of your account at any given time. But the thing, if using percent, like 1%, that is dynamic. It goes up and down with your account size, right? So that's what I do. I do 1% of my account. My R is 1% of my account. Every single trade, I will risk the same amount. So let's do easy math. 10K account, right? What's 1% of that? It is $100. So every trade, I will risk $100. If the stop is 20 cents, how many shares am I going to take? As you saw in the last video, my math wasn't the best when put on point, but that's 500 shares, right? If the stop is $1, how many shares am I going to take? Well, I'm going to take 100 shares, right? So the share size is based on the risk, and that's going to differentiate. That's going to be different for every single stock, every single setup within the same stock, etc. Because I provided some examples before. I would trade before when I was on fixed share size. I would trade MU twice. Say I'd take 500 shares each trade. Well, the first trade, my risk was 25 cents or something like that, right? And say it ended up being a winner, great. I came up with 50 cents. But the second trade, I still took the same 500, but the stop was 50 cents. Maybe it was during some volatility or some reversal, low of the day was far away, whatever. And say I ended up losing 1R, quote unquote 1R at the time, right? Well, I ended up wiping out this gain, even though this was supposed to be a quote unquote 2R, right? Because again, you're not standardizing the R, right? The percentage you're risking. I hope that answers the question in terms of risk multiples and what the R means. If that doesn't, please let me know in the comments down below. Okay, so let's get into the trade. Switch gears to that, and then we'll come back to answer Adam's question about when to scale up. Okay, so let's open DOS again. Now, as you can see here, AMD, I traded it again today. Some catalyst, I have no idea what's going on with AMD. It was really gearing up to break up above this daily pivot here at the $30 range. I thought, okay, so put it on watch, even though it wasn't a gapper. If it breaks above 30, then we're pretty clear to run. I think the next area was in this $33 area. So it popped up at the open. Well, first look at my trade log, right? If you can't see that, just pause and zoom in. I was in the first trade for 7 seconds. Excuse me, you can see the guilt of my voice, right? 7 seconds. I was in before the first 2 minutes. So, I've been at this for a little over a year. I've managed to stick to the rule that don't trade the first 5 minutes for the first bit of that, right? And then I changed that rule to don't trade the first 2 minutes, right? I'm looking for those 2-minute opening range breakouts. And I've stuck to that rule after, I don't even know how many trades here, almost 2,000 trades. Today was the first time I broke that rule. So there's some significance in this, right? I jumped in 90 seconds in. I don't even know what I saw, guys. Let's expand these charts here. I don't even know what I saw. I don't trade these 1 minute orbs. I don't like how they move because I'm not comfortable that early on. I'm not in my comfort zone. When you're not in your comfort zone is when you get rattled out easily, right? When I'm in my comfort zone, I can handle the volatility. I can handle the whippiness, the spreadiness. So as you can see, I got in on the 1 minute orb. It started coming back down. right? I didn't know where my stop should have been, VWAP or whatever, right? But again, I don't take this setup, right? So as soon as it came back down, I got rattled out and just took a -1 R loss in 7 seconds, guys. 7 seconds. And I always tell my trading buddies this. It's a conundrum in trading. Our losses happen so fast. We don't know what hit us, right? We just get a right hook across the face there, right? We give away hundreds of dollars in seconds. And then we try to make it back. It takes minutes to hours, right? So we work so hard to get our gains, and they can just be thrown into the trash can. Literally seconds, right? Literally seconds. That's supposed to be a garbage can here. Maybe I'll draw Oscar the Grouch or whatever. But right, so then I jump back in. This time a lot closer to the 2-minute mark, right? As you can see, 9:31.54. And on the 2-minute chart, it was ready to form an orb. Here I had a valid stop, right? I'm gonna stop here at this low. There's somewhere a pattern I'm recognizing, which is a bull flag. And my 2 to 1 would have been at 30.45 right here. As you can see, I didn't exit there. What did I do? I broke another rule. I wanted to get 3 Rs to pay for this loss. And if you look over on the desk here, it says 2R, all or nothing, don't be greedy. And look what happened here, guys. Over the next 4 minutes, it really looked like it was going to come back. I was in a situation that I should be taking profits. Take the 2R, Robert. Take the 2R, Robert. And it was ready to come back on me. I was giving up this winning trade because I was so focused on this trade. And I told myself, okay, I just snapped out of it, shook my head. I said, Robert, you need to take profit here, okay? So this is going to become a break-even trade. Started making up rules on the spot. Sometimes we do this, right? We're breaking existing rules. We make up new rules on the spot and break those. I said, okay, if this comes back to break-even, you're getting out. This is not going to be a 1R loser. But you're allowed to get 3R here, right? Because it's just so strong. Look at the 5-minute chart. Look how we broke up. We were breaking up on the 5-minute orb, and everything was pointing bullish, right? Even though we were consolidating here, it was just holding very strong. And the 15-minute chart was also a huge orb. As you can see, we're still pumping up here, right? So we were making ground, and I held to 3R right there, 30.60, and that ended up just being the entry point for new longs to get in on this flag here, right? Saw some people in the chat who took that, so great trade there. I always wonder who's selling on the breakups. You know, everyone should be buying. Well, obviously it's earlier entrance, right? So selling into strength. You often hear people say that, right? Buy the dips and sell into strength. And yeah, that's my day. So -1 on the first and +3 on the second. Came up with +2R. Did I trade well? Not really. Was I green? Yes. Am I happy with myself? You know, it's mixed feelings. I hit my daily goal, but I broke 2 rules getting there. So I called it a day, guys. I'm missing all these moves here. People in the chat room are just high-fiving each other left and right here. A lot of clean moves. Great watch list today. Great gappers, and I did this to myself, right? So thanks for watching. Oh no, wait, we're not done yet. Let's talk about sizing up. Sorry, Adam. Didn't mean to offend you there. No hard feelings. Okay, so he wants to know. Cool. A refresher video would be great about R. That's what I just did here. It'd be great if you could speak about the transition, what the transition looks like from beginner with very small size, mostly for practice and making a little bit of money, to moving towards making a living with adequate share size. Do you up the share size gradually or quickly? Do you try larger size across the board or just one day? Do you set a requirement like X days profitable in a row before you're allowed to up the size? Well, I spoke about this in my last video, right? About upping size for the right reasons, right? In the trading plan. There's no universal answer for this. When do you want to upsize? Say you start at $5, $10 risk, right? Round number, nice, okay? If you can prove to yourself that you can return, right? This is one of the reasons why we trade in Rs. When you're trading in Rs, you standardize that, right? Every day you're trying to get, as a beginner, you're trying to get 0.5% to 1%. So you're trying to get 0.5 to 1 R a day. If you can do that for a month, right? If you can return 10 Rs, 10 to 20 Rs in a month, I say, that's some consistency there, guys. Andrew always says this. If you can't make $1 a day on average, what makes you think you can make $100 a day? Right? You're dreaming. Right? There's no rush to scale up. So I can't give you a universal answer, Adam. Some people scale up after 5 green days in a row. Some people scale up after they don't care about the streaks, because thinking in streaks can be very dangerous too, right? I stopped thinking in streaks. It can just be in terms of weekly or bi-weekly performance. Say maybe in 1 week, if you can return 5R, scale up a little bit. Or maybe in 2 weeks, if you can return 5 to 10R, scale up a little bit. Maybe in a month, if you can return 10 to 20R, scale up a bit. Maybe if you say, if I can be 4 out of 5 green days in a week, scale up a bit, right? It's really up to you, right? Really up to you what your rule is. Some people say scale up every time you return 20R. That's like kind of the milestone. Every time you get to 20 Rs, bump up your size, and that will happen naturally. You're just going to increase your risk every time because your account's growing, right? And as I said, my advice here is to do it very slowly, transition slowly. There was a time last year when I was trading, I don't even know when I was trading maybe 500 blocks or whatever. This was back when I was fixed share size. I was doing so well. I killed it that one month. I think it was June. I killed it. I was doing so well, got overconfident. I just doubled up overnight. And then over a period of 2 weeks, I had my equity curve went from, slow, gradual like this, right? This is how you want to see it, to this, just like this. And then I gave it all back on the epic Hulk day where I lost $2,000, right? You guys remember that? It was called peak regression in the rants out there in the education center. I lost $2,000 because the money was shocking. I was in the swings, right? I was like, oh, sweet, I'm up 500, I'm up 1,000, I'm up, oh my God, I'm down 500, I'm down 1,500. When I was dealing with, 150, 200, 300, you shock yourself. You got to go gradual, right? You got to go so gradual that you don't care about $5, $10 a day, $5, $10 a day. What's $5, $10 a day, right? You're tricking yourself, right? And then when you think in R's, you get away from the money. This is why I love the R method. I don't think in money anymore. I think in R's, right? So eventually I'm trying to hope to get to an R that's going to be, in the thousands, right? Eventually, isn't that not our goal, to make a few thousand a day? And how are you going to do that if you're so fixated on what $10 is worth, what $25 is worth, whatever, right? When you go to the R multiple, you hopefully have the experience and you've built the tolerance enough, right? You've numbed yourself, you've desensitized yourself to the dollar sign, and you're now thinking in R's. Okay, so Adam, I don't know if that answers your question. Probably not. It's just a long ramble. Figure it out for yourself, right? I don't want it to give you guys universal answers because we're all different, right? It comes back to that triangle personality in here. Some people may be able to scale up really fast. Some people will require to do it very, very slow. It's up to you. But in terms of scaling up to the point of making a living, you should not try the first few years. Your day trading performance should not be tied to your income and whether you can pay the bills or not, right? Andrew always says that. Don't quit your job to day trade, guys. The pressure will just be too much. You're going to start doing crazy things to try to get big gains and pay this and pay that. Just start thinking in terms of car payments and rent and beer money, whatever it is, right? You should be consistent, and even then you have to, it's a gradual blend where your consistency and your day trading versus your regular income should meet at some point here where it says, okay, now it makes sense to quit a job. I can survive off this, right? But definitely not a rush. Okay, so that's a long rant. Bonus question if you stay till the end. A few weeks back, we put out the video on how to trade the open with 1 minute, 2 minute, and 5 minute orbs. Question relates to that. It goes, what if I took the trade when the next 2 minute candle breaks above the first candle's high, but when the candle finished, it hit my stop? Well, the response there is pretty simple, right? You move on to the next trade. You take your stop, you don't take it personal, and you start finding something else to trade. No strategy works 100% of the time. This is why we must manage our risk. Not sure what else you want me to say. So yesterday, I actually didn't do a recap, but I'll share this trade with you guys. I had one loser yesterday, and that was my day, basically. Missed the open for whatever reasons. MU, right? MU, 200 simple moving average on the 15-minute chart, forming a reversal. Looked over at SPY. SPY also bottoming out on the previous day close and some sort of prior day level here. So super strong support. And pulled up MU. Chart looked great. 5-minute hammer looked great. 200 simple moving average here, and on top of that, pulled up a 30-minute chart. That was also the 200 simple moving average. And on the daily chart, we had levels around here, a daily moving average. We had yesterday's low, and so just 5 or 6 areas of support. What happened? Well, it popped up a little bit. Pull up a chart here. It popped up a little bit, right? The rest of the market went for a run. The rest of the market actually went on to reverse and break high of the day and off into the sunset, just trending up all day. What happened to MU? Nothing. It faded down, and I ended up getting stopped out. Did I take it personally? No. Do I know a thing about reversals? I'd like to think so. Am I still going to take them? Yes. This is one trade, one reversal out of hundreds that I'm going to take, and I've already taken, right? This strategy should work. But does it always? No, there's no guarantees in the market, guys. So don't take it personal. Don't start doubting yourself and changing how you trade based on one single trade. Don't go off revenge trading and getting angry and frustrated. Take it in stride, guys. Just take it on the chin. That's how we do these things, right? We're not going to be right all the time. Okay, so bonus question. Hope you guys saw that. If not, then I hope, I don't even know what to say here, as that's the end of the video.